live. Okay.
Okay.
So I'm going to say it is March 14th of 2026. Thank you for being here. I usually don't come on this late, and I don't usually forget to turn on my light, but let's get this thing started.
Welcome to the show, it's Mortgage Talk. Grab a coffee, sit, and let's unlock the dreams you've got, the place you crave. From the front porch swing to the hidden cave. Talk about your home, talk about your plan, talk about the future where you'll stand. Your mortgage, your dream, your story to give. Let's talk about the place where you wanna live. Got questions? Here's the place to be. A TikTok Live Mortgage Jubilee. Fix or float, we'll break it down. From city lights to your small town.
Cause like I did my final bankruptcy payment. Actually, shortly I'll be doing it. And I'm going, what's next?
Yeah. So thank you for joining. My name is Kenny Murden. I'm newer to TikTok. I'm not new to lending. I've been lending since 1999. And in that time, I've been helping real estate agents and loan officers structure their more complex deals, which makes me very well qualified to help you answer any questions you have about mortgages. Now I know it's after hours. I'm in Texas, for God's sakes. This is 9:50 p.m. So what am I really doing here? I'm showing my friend who's a real estate agent how to go live on TikTok. Say hi, Robert.
Hey, what's up? This camera's like, I gotta like push him up. Like I feel like the Joker, you know? Like, but hey, Robert Wink, Coldwell Banker Realty out here in Denton, Texas, Argyle, Texas. And I'm gonna be honest with you, I fucking hate realtors. So if you have a question, I'm here to answer your questions on real estate. I don't care what state you're in. Because guess what? All commission's fucking negotiable. And that's what I'm here to help you talk about. I mean, my background, I've worked for FEMA. Yeah. Better way to do. I worked for the Bureau of Engraving. I've worked for the Army Corps of Engineers. I used to own a construction company. So any questions you have on like what depreciates your house or what, just questions in general. I'm here to help you out and help you save money because it's all fucking negotiable. Can I say fuck? Is that good? Is that too much?
No, I have a family-friendly show.
Oh.
But what we're talking about for Robert is he's gonna do a channel for real estate that's going to be not family friendly, and but what it's going to do is it's going to save a lot of people a lot of money for their real estate side of things. But as you saw here, I have the ability to price out any mortgages for you live here on TikTok. I can price out any deals if you have. If you or anybody you know is looking to buy or refinance in the near future, you can share this with them. If you like the content, like it. If you don't, please scroll. But other than that, I'm happy to answer any questions that you might have about real estate or mortgages. And again, I am never going to be coming on this late, but I appreciate that there's a few people that are showing up here. And if you have any comments or questions, feel free to join the party. Again, I'm just showing this guy what I'm doing. But cheers, Robert.
Cheers.
It's lemonade TikTok. That's all it is. It's lemonade.
No, I'm curious. What in the chat? I see people joining. Man, you have a lot of people joining.
Yeah.
My question is, what does everybody do? And the reason why I bring this up is that I do real estate. I'm retired Army, but I am huge in government contracts. Government buys everything. Okay, everything.
True.
So if you do real estate, landscaping, we buy it in the government. I work actually FEMA. I actually oversee security. We won't get too much into that. But I wonder what everybody does. So if you can I post? I'm new to TikTok, so I'm like a newbie, all right? I'm like can I post and what they do for a living?
Yeah, I mean, if they can comment whatever they want. They could literally, tell us what they think about us. But no, I hope you guys are having a good night. We're not actually. So normally, I'll come on once or twice a day for an hour, usually in the morning. And so like 10 a.m. Central and 4 p.m. Central is when I typically come on for about an hour. And I have kind of a serious show talking about mortgages. I share my screen. I can price out deals for you. We talk a little bit about the markets. And we also look at the debt clock and why interest rates are going up right now. Typically when wars happen, typically what happens is the stocks sell off and then people buy bonds, which makes rates go down. And that's not what's happening now because of the debt clock. And that's why I bring that on in my show. And what's really interesting is what things are happening. Like we all know oil is going way up, but it's not just going up because of the war. What's happening is because, let's see if I can move. Oh, it's not loading the straight shot up. There it is.
May I interject?
You see that straight shot up. What's happening is when stocks sold off, they didn't buy bonds because bonds, they didn't see this as a good risk. That's ridiculous. So they didn't see that as a good risk when they figured that they could overbuy oil and let retail come in and buy oil thinking it's going to the moon, and then they're going to dump on all of those retail investors. So that's really, in my opinion, this is a tinfoil hat, by the way, but that's my opinion on what's going on. So yeah, interject.
No, I'm going to interject on this because Robert Wink, actually I've worked for many federal government agencies. And actually I did 2 deployments to Iraq as infantry. And I will tell you some off the wall things, kid friendly.
Well, you've already cracked the seal, so go for it.
So what it is that when I worked at the Bureau of Engraving in Fort Worth, Texas area, we actually this is actually when the Russian war kicked off between Ukraine. And so we actually, at the Bureau of Engraving, had to do a contract for fuel to do our generators. And so what we did is we did what's called an economical clause in the contract. Now, they were not like, what is this? Like, they were mind blown by this, that this came up, and it's in the Federal Acquisition Regulation. This is 2021 when this happened, 22. And so what it is, it says, hey, if diesel fuel or fuel moves up, they're allowed to do what's called an equitable adjustment and say, we need more money on this contract because of it's outside of our control. And at the end of the day, we end up saving a lot of money and the generators for fuel. That's simple of it. That's government contracts as a whole. I can talk government contracts all day besides real estate.
Oh, 1 second.
Go ahead, hit it.
Hamdi is asking what states do we cover. So I'm personally licensed in Texas, where I'm at right now, and Minnesota. But my team can cover you anywhere, coast to coast, sea to shining sea. And I'm able to price any deal for you right now if you're talking about mortgages. If you have questions in real estate, we have Robert here is a real estate agent, and he can answer any of those
So
questions.
when it comes to real estate, I'm licensed in Texas, but I can refer any deal out. And guess what? Money talks. So if I go, you're in Missouri, for example, or Pennsylvania.
Hey, Minnesota's in the house.
Minnesota. I could sit there and say, hey, realtor Hamadi, I'm sorry if I messed that up. He wants to go purchase a house in St. Paul, Minnesota. And I can go, hey, realtor up there, hey, they want you to write an offer for $4,000. Will you do it? And, you know, all realtors want 3% or 2% or 1%, whatever. They all want 3%, let's be obvious. So they want to make this money for the least amount of work. At the end of the day, it's what's their hourly rate? What's the level of effort? And they're writing a contract. That's easy stuff. So why not? Go ahead.
Hamdi is asking what's the best number to call. So my phone number's at the top. You can screen save this and call or text me anytime. But if you want to join the conversation right here now live on TikTok, hit request to come on and I'll let you here. I'll even send you. I think I can send you a request to join us right now.
I'm all about live interaction. I think this is great. It'll help you educate everybody else throughout the U.S. and we can answer your questions.
But yeah, I didn't mean to cut you off, but I just wanted to get his thing.
This is apple juice.
Yeah, it's apple juice. How do you let's see. How do you perfect security interest in a plain loan? It's not UCC one filing. Honestly, like I have commercial lenders that I could probably get that for, but I don't. So like what I show you here, I'll bring up my display again. I priced out the stuff that I price out live on TikTok are conventional loans. Oh, you requested how many? I didn't see the request. If I see it pop up, I'll absolutely. Let me see if I can. Because I see the one there. It might be a TikTok failure. But anyway, as far as the commercial loan goes, I'm not able to price those out live on TikTok. But if you text me, I can take your question and get an answer for you. So it would be worth your time to text me. And Hamdi, son of a gun, I don't know why that's not coming in. You see the one, right?
I do see the one, yes.
Normally, oh wait.
Whoa.
Do it again. There, accept.
Amazing. As we said, apple juice.
Oh, you know what? I need to get my headset on though. Otherwise, it's gonna have echo.
Throw your headset on.
All right, you're on, right, Hamdi?
Yes, I'm here.
Yeah. So if you have any questions, feel free to ask him. We're live.
Okay, so first of all, I want to thank you for accepting my request here. However, I was planning to call so I can speak with you. So I want to buy a home, and my plan is to buy a home by end of May. But I came making this decision in the last couple of months. I talked to two lenders, I'll say, but I don't think things are going correctly because of some situation, and I totally understand both of them. But there's some mistakes. I went through while I was getting divorced in 2021 on my credit score and everything. So my credit went down so big time. Can you guys hear me?
Yeah,
Yes.
I'm muting myself because if you talk without my earphones on, it'll be an echo. So I'm just muting myself while you talk.
Sounds good. So my credit score went down due to my divorce, and I was going through a lot by that time. So however, by this time, I'm a truck driver, so I'm a self-employed. So most of the time when I used to want to buy a car or anything, I used to purchase with cash money. I didn't care about my credit, but I came to make a decision of buying home because I've been renting for the past 11 years of my life. And I say, what, enough is enough. I want to have my own home because it's like I'm throwing my money somewhere. And my daughter, she's almost 5 years old right now. And I remarried again. So all in all, I'm struggling. Both lenders, they told me due to my credit score, I won't be able to buy a home at this moment until that credit score gets somewhere. However, when I go to YouTube, most of the time and listen, I hear many different lenders speaking about FHA conversion loan. You can get a home with a 10% down payment on FHA. But when I try to ask them, they say, it's not true. It's not like that. So I wanted to get to hear your opinion since you are licensed in Minnesota. So you can tell me, because me having a home by May, that's one of my biggest goal I have right now.
Yeah, and I appreciate the follow. I'll follow you back when we're done with this. But my question first off is, do you know approximately what your credit score is?
Like 570.
Okay. All right. So if we get it, do you have a 10% down payment by chance?
Yes.
So then you're good there. If you got up to a 580, you would only need 3.5% down. But since you have 10% down, that is good all the way down to a 500 credit score. And so you should be good. I would just say if you text me or if you reach out to me, because we'll be connected on TikTok, I can get you the application link and I'll be able to put that together for you, no problem.
Hello?
Hello. Don, how you doing?
Good, brother. How are you?
I am fantastic on apple juice. How you doing?
Doing all right.
That
Can't
twice?
complain.
I said it twice. No, we're having a good time. I was actually showing this guy how to do TikTok live. I think I have an idea for him on how he can do real estate.
He's been pushing this for like 3 months and going, hey, Robert Wink, hey, man, you need to go on TikTok live. You need to do it. You need to do it. There's so many opportunities and people you can help out. And we know you just like realtors and you are straight to the facts. So I agree with him. I just haven't jumped on board. So tonight's the first time live. And
so here's his big idea. This will help you guys. If you're thinking about buying a house, like Hamdi, if you're thinking about buying a house, this is Robert's idea. See how I have this big banner that says Mortgage Talk. His thing is going to say F Realtors. All right, he's a real estate agent. It's going to say F Realtors. And the way he's going to help you F Realtors and get you the better deal is by doing a flat fee of was it $4,000 or whatever?
$4K.
Yeah.
Straight. So
rather than them working on a percentage basis on these houses, and they're making an astronomical 30, 50. Yeah, go for it.
So really in real estate, they usually say, hey, I want 3%, right? So the same paperwork I do for 500,000, 300,000, a million, it's almost identical. And the only difference is if you have a MUD, a PID, a HOA, whatever. It's the only thing that really changed everything. So as a real estate agent, what I've realized is that the industry is trying to stay at this 3%. I'm going to be honest with you. It's 3%. And so no matter what price range you're at, 3%. It's all negotiable. And so my thing is, you as a buyer or seller should be like, wait a minute. Why am I giving you my equity to sell my house or buy? If I want you to make an offer on this house, it should be a set price. You can go to an attorney and do a set price. They'll do it. But a realtor will do the same thing. And so these realtors are entitled to this 3%. So why don't I sit there and do $1 million house at 3%? But if I can do it at 2% or 1%, fuck that shit. Sorry.
It's the apple juice.
Apple juice. We can do percentages and go, hey, $4K, $4,000. You know why I say 4K? Because 4K television. It's everywhere. So if you sit there and call me or mortgage, and they sent it to me and said, hey, I want Robert to represent me and give me somebody out there. Guess what? Realtors are desperate. They're desperate. I'm going to tell you why. Because they want to make money. If you say, I can make a deal for writing you a contract to buy this house for $4,000, and they make, let's be honest, I'm getting 25%. I'm getting $1,000. Let's be honest. They're getting probably $1,000, and then the brokerage is getting $2,000. It's a freaking win for you. Or you can say, hey, out of that $4,000, they're willing to pay 3%. What's that called? 2-1 buy down? You want to talk about that?
I'm not a fan of so the 2-1 buy.
Let's be honest. Be honest with your people.
Are you a fan of it?
I love it.
Wait. Well, before we get into that, Don, what was your question?
Go ahead, Don.
I'll just tell you a little quick excerpt of where I'm at. Okay. I'm at 20. I'm not at 3.5%. I'm more than that. I'm thinking about conventional loan, and I got 20,000 down. I got over 800 credit score with me and my wife. My wife does not work. I'm sole income, 118. And so, hold on one second. And so, are you there?
Yeah,
So-
we're here, but I mute myself when you're talking so you don't echo in, because I normally need to wear my headset. But go ahead.
Okay, so we're looking for a home, and ideally, we're trying to stay between 250 to 350. By the way, the area that I live in is in Buda, Texas, right by Austin, just south of Austin. And we're looking for a specific home. And so what we're trying to do is trying to find out what is the best way to take out a loan, whether it's FHA, conventional. I'm not part of the military, so VA is gone. So what do you guys recommend? Oh, by the way, we're first time home buyers. What do you guys recommend for us to how do we approach the situation?
So
Get the loan first, get the realtor first, all the above.
so
Go ahead, hit it.
definitely just text me. I'll get you the loan application link. I'm not exactly sure. It depends on the condition of the property, but you're going to have a lower payment if we use a government loan. So you said you're not VA eligible, is that right?
That's right. Yeah, none of us are VA eligible.
Okay. So then we'll probably, if the condition of the property that you buy is good, you'll have the least amount of payment for FHA or USDA, depending on where it's located. And then if we want, we can go conventional. That's fine. You said you had 20,000 down, not 20% down, so you're not going to be able to get rid of mortgage insurance. But
We don't care about PMI.
yeah, but the mortgage insurance is reduced now with FHA, so it's I just got a text message here, so I appreciate you whoever texted. But anyway, we'll look at both options. I'll give you both options, but I'm telling you, if the condition of the property is going to pass FHA, it's going to be the better payment for you. And then I can price it out right now so we can kind of get an idea of what that would look like. But if you want to send that information, I'll get you the pre-approval letter. Robert here, what we're talking about. Yeah, go ahead.
Okay, sorry. My trigger finger. I was on 2 tours in Iraq. So let me say, regardless if you're part of the military or not, love you. I think as an American citizen, regardless, you're doing the American dream of buying a home, and I appreciate that. And I think that's what America's great about is the opportunities that are out there. If you don't mind asking, what county or city are you looking at? Looking at
So
Austin,
the
or are you
city-
like Pflugerville? Like, look,
No, so the city's going to be Buda or Kyle. We're still open to, it's going to be Hayes County.
it's going okay.
And so we're trying to figure out whether we need to go to pre-built or new build homes, depending on the interest rate. I know that pre-built is going to be 6% or 5 to 6%, but we do see that a lot of the new build around here is going to be 2.99 or even 3.9. So we're just trying to figure out with the interest rate, with the new build or the pre-built, like what is the best, what is the best offer that we can, what's the best route for us to go through? So that's why we're kind of teeing off of which one is the best route to go through, whether it's pre-built or new build.
I'm starting to catch your I'm like, all right. I didn't catch your name. So my question is, that's multiple answers to that, and that's a deeper dive of where do you work, where does your wife's spouse work, and what opportunities are available. Go ahead.
She doesn't work. It's sole income. I made 118 last year.
118. Congrats. Love it. And I mean that is exciting because the 100K plus is a club, and I appreciate it because I think everybody's trying to get to that. And 118 5 years ago, 10 years ago has changed. And so where we're at today is that, I know you have an answer on this, but
I was pulling up the median income on the debt clock.
okay. So like what I look at is what's the goal? Are you planning on having more kids? Are you planning on expanding your household? And I love older homes because it helps Kenny out. Kenny could definitely give you the best price for that. And older homes, here's the kick. Depending on the older home, we have to look at is what is the HVAC? How old is it? How old is the water heater? HVAC is what? You just replace one. How much it costs?
10 grand.
10 grand. All right.
AC, yeah.
All right, that's a hurt. That's a kick in the gut, man. I'm gonna be honest with you. And as a dad, as a father, as a homeowner, I had to pay 25 grand for my roof. Actually, you're replacing your roof, right? Mm-hmm. Okay, so homeownership. We don't talk as dads. We don't talk about this enough about carrying, or I'm not saying carrying, but supporting the household. We're like the world ends, and we're the ones to solve the problems. And I agree with this. And so being in your position, I've been there, and Kenny's been there. And the question is a new home or an old home the best way to go? It depends on what I call it risk. And that's the question is, do you want to replace the roof? Do you want to replace the HVAC? Do you want to replace the hot water heater? Do you want to do the foundation replacement? I love new builds. Kenny probably, I'm going to assume, correct me if I'm wrong, he probably hates new builds because they probably can give you the best estimate, the best mortgage rate.
Yeah, 299. I'm not going to be able to touch that. So I would say if you have a builder down there that's going to get you the 299, go with that. I have a program with, if you were going to go with, it's like an equity share thing where we pay like over 7 points to lower the rate from like it has to be conventional only, 10% down. And then it's basically from a 6% down to about 4.5%, with less than a point in discount points. I have to talk about the cost, not just the rate, for compliance purposes when I talk about rate. But the lowest I can get is in that 4.5 range. And if you're able to get the 299 through the builder, do that. Like, absolutely do that. Because what they're doing is they're paying down the financing of it out of the proceeds. Now, the builders, they're propping up the market value of the house, the purchase price. That's the
But that's negotiable too. We have a realtor that's negotiating that. But here's the other thing too. Here's the kicker. It's not just the 2.99. It's the fact that we have $10,000 to $15,000 flex cash that we're able to use for upgrades, but also we're able to throw that down as a down payment on top of what we're adding. So that's why I'm saying I am torn between new build, and I don't know how familiar you guys are with our location, but Kyle and Buda, they have a problem with the soil, being there being a foundation issue. So that's something also that we have to consider, but there is a warranty that comes with the foundation of 10 years. So it's just something that we have to like tack on in terms of what, pros and cons, right? Of having a pre-built home and then builders building these homes too quickly where there are issues that are known issues. And yes, the incentives are great, but at the same time, are there going to be issues down the line where we have to, shell out some cash to fix these issues that do rise up in due time? And so it's just a question of, what's the best route?
I'm gonna tell you, my home's sitting 10 years, and they're actually replacing the home. They're doing the foundation repairs right now. I can send you pictures, and I have a joke of zombies actually coming out. All right, I'm prior Army infantry, 2 combat tours, so I have a 6th sense of humor. I'm gonna tell you, for you and your wife, no offense to you, brother, I love you to death. New build all fucking day. All right, and the reason why I say that is because it's gonna be taken care of. The 1-year workmanship, the 2-year fucking HVAC, whatever. Sorry, kid friendly, my bad. That's it. Sorry. Apple juice. That's quite apple juice. All right, so I'm gonna tell you, is go new build if it meets your square footage. Because if you have a 3-bedroom, 2-bath with office, you do it. All right. That's what's going to sell. 2-car garage, it's going to sell. It's going to be easy in 5-10 years. All right, we can sell that all day. But if you're like, hey, I'm not saying how your wife look. We all have kids, right? I have 3 kids, all right? And I stopped, all right? So if you plan on more kids, you're going to get a 4-bedroom or 5-bedroom or 6-bedroom, okay? 5-bedroom or 6-bedrooms don't sell. I'm going to be honest with you. Because you're looking at multi-family or generational builds, okay? Those are hard to sell. So I'm going to tell you, new build all day, unless you want an older build with more square footage or whatever, you're not going to beat the interest rates, love you, Kenny, that you're going to get.
I agree.
All right, from the 2.9%, it's all day. I would do new build all day in Kyle, Texas, because you're right in between the beautiful spot of Austin, Texas, and San Antonio, Texas. That is growing. I would not be surprised, like Denton, where we're at, Denton, Texas. we're about to be conjoined with Fort Hood, Texas. We're about to be brothers, okay? Same thing's going to happen between San Antonio and and Austin, Texas. That stuff's growing. You got Futurist Commanding and all these businesses going down there, coming out of California, whatever. I would recommend new builds. All right.
Right, but on new build, would you recommend? I don't know, and I don't know if you're just looking at one neighborhood or multiple neighborhoods. But is it better to go with a builder where they're just starting to build out the neighborhood? Or is it better if they are almost completely built out? What's your opinion on that, Robert?
When it comes to new builds are always a win. And the question I ask is, what school and this becomes a personal question of how far are you driving to work? Because you will never get time back, okay? I remember I used to drive an hour to work back when I was an Army recruiter in Fort Leavenworth, Texas. I recruited in Kansas City, Fort Leavenworth, Kansas. I drive an hour every day back to work. Every day. Monday through Friday. An hour. And I would sit there and think to myself, 2 hours of my life is driving back and forth to work. If I wanted, and I lived on base, okay? And so as a family man, it's like, how much is that worth seeing my kids?
Yeah, I mean, location is good, but what I was driving at is if they're just starting out a neighborhood, they're going to try to tend to get the values to continue to increase higher.
Correct. In Argyle, Texas, where we live at, Denton, Texas, Argyle, Texas, Denton ISD, Argyle ISD, depending on what side of the road you're on, you sit there and you look at that and you go, all right, a new build, for my house right now, I can sell for $375,000 and beat everybody on the market. Realistically, everybody's listing at $400,000. But new builds, just like my house, is going for $450,000. Why do people pick a new build over an older build? The reason why is because of the warranties that are available. And it usually comes down to foundation. And so what new home builders are doing, and I love it that you have a 10-year potential home warranty, they're going to 6 years because I realize at year seven, that they are, holy crap, my fingers disappeared. 7. All right. 7 is that they notice that magical numbers, if I do 6 to 7, I can push it onto the homeowner and I don't have to spend. I'm going to be honest with you, with my 60 pillars, that's $360,000. It's about average per pillar is $6,000 to lift your foundation. $6,000. My house is only worth $375,000, $380,000. They're paying for my house to be lifted? That's insanity.
Yeah,
Go
I
ahead,
saw
hit
those
it.
pictures. So hopefully, what I'm hoping is if you're looking at a new build, hopefully the neighborhood is almost fully built out, because if you buy the property and they're able to finish out the build, if you ever, for whatever reason, unforeseen or foreseen, have to go and sell the property within the next few years, you don't want to be competing with other new builds in your same neighborhood. So you would like to, if is the best position, in my opinion, is to buy the last house built in the neighborhood.
May I add?
Yeah.
So, if you're looking at the new build, all right, you want to sit there and you don't want to be the biggest house on the block. 300,000 square feet, 3,000 square feet, correction. Sorry, apple juice. So 3,000 square feet, no. Usually, if you're doing a 4-bedroom, 2-bath, you're looking at 2,000 square feet, 2,500 square feet. And the moment I hear 2,500 square feet, I know you have a family room probably on the second floor that enters a 3rd bedroom. Or you may have 4-bedroom, 3-bath. So these are all things to look at. And we've kind of jumped off topic, but the gentleman that we were talking to, what are you looking at? What's your wife like?
For Don?
So I'll tell you this, like we've already looked at homes and our square footage is around 2,000 to 2,500 square feet. It's all of them have been 4-bedroom homes, 2-bath to 3-bath homes. And here in Texas, which I love, it's a big backyard, which is also a selling point for us. But my wife loves a big kitchen. and we've seen that our budget has been between about 350 to 4. And that's 4 is like extended. 4 is like, hey, we wouldn't want to get to that point, but 4 is like, it seems like it would have everything that we want. 350 is where we want to be, or less. And so that's what we've been seeing from our realtor. But at the same time, I've told her, hey, we're also looking for like the best deal. So negotiate, see what we can do for homes that are within our parameters of what we want, but also within the budget that we want. So, it's a big ask, but at the same time, we've worked really hard on our credit. We're both above 800. My wife doesn't work, but her credit score is above 800. She has credit cards under her name, and I'm the sole provider. And yes, 118 looks great, but it's not, what it, nowadays, 118 for a household income is not the best nowadays. And so it's just one of those things that we're trying to figure out on what's the best option for us.
May I?
Yep.
All right, so Kenny and I, we've known each other for years, and this is actually the first time live. And we both have gone through divorces. All right. Last year I put in for divorce, and I don't want you and your wife to go through divorce. That's the most emotional thing you'll ever go through. I'm gonna tell you from a real estate perspective: 4-bedroom, two bathroom, 2-car garage is the money market. And if you have an office, bingo. But if you could sit there and go 4-bedroom, office, 3 bathrooms, you're going to win, no matter in real estate, because and I don't know your realtor, but when I sit there and I look at real estate and I go, okay, how far do you want to drive to your work? Because you love your wife, I love my wife, you love your wife, etc. All right. The thing at the end of the day is, it's about, I'm gonna be honest with you, it's what happens in the future. We don't know, and so I'm gonna tell you from a financial standpoint, because that's what I deal with, and then what I understand and Kenny understands is that what if you could sit there and put your house on the market tomorrow? I'm gonna give an example: 4-bedroom, 3-bath, office, 2-car garage. You're going to freaking win every 4-bedroom, 2-bath. And so what I'm gonna tell you is, how far do you want to drive? That's really what the question we have to ask. If that drive is an hour drive, it's 45 minutes, you're never going to get that live back. I'm going to tell you, from my experience, me driving an hour to work and an hour back allows me to unwind. It allows me to communicate with my wife. I love her to death. It allows me to communicate with my friends, my family, on what life's going on. It allows me to decompress. It's the decompression. So when I step in the 4, I'm changing diapers, all right? I'm going to tell you, I'm all in on it. Like, if I was in your shoes, I'd be looking at new builds all day. And I'm not trying to take it away from you, all right? Making money.
I think we're all on the same page. So Don, you're looking at a neighborhood where you're able to get that 299 rate. I think all 3 of us are in agreement on that. I was just pointing out that if it's almost completely built out, you're at a more of an advantage than if they're just getting started in the neighborhood, because it might take them an additional, couple of years to build that out. In that time, if you had an unforeseen thing where you needed to sell, you would become likely an unintended landlord, because you'd be competing with new houses in the same neighborhood, and that's tough to do on your value. But after it's built out, that's typically you're in a better situation on value. That was my only, kind of 2 cents to go into the new build conversation. But, if you had any approval issues where for whatever reason they weren't able to hook you up with that 299, then I would love to be a backup offer for you to do what traditional lenders can do. I'm a mortgage broker. Not only am I going to give you the best interest rate that's available, but I also reduce my compensation to make sure that you're going to get even lower. That's why I come on here and I show rates. It's kind of to give people the effect of, oh my goodness, I just got quoted this higher number. Why is that? But that's kind of the magic of what's happening there. Lenders are typically, closing on average one deal a month. Do you want to be somebody's 1 month meal ticket? No, you don't. So you want to work with somebody that's doing high volume. That's why I come on here. That's why I talk to multiple people every day. And so if you're not looking at a new build so Nicole's asking, I'm licensed. I'm going to answer Nicole's question. I'm licensed in Texas and in Minnesota, but with my team, my company's licensed in 48 states. So with my team, I can help anybody in the 2 states that we're not licensed in. I have another friend that's licensed in there, so that's why I say I can help anybody in this, from sea to shining sea. Thank you for the question, Nicole.
May I?
Yeah.
Thank you. I appreciate it.
Can I say something?
Go ahead, absolutely.
Yeah. So first of all, I want to thank you guys for whatever you guys are doing here. I've been listening here, and I'm looking forward to work with a gentleman there with Orange, so he can fulfill my dream, of me, being on my home at the end of May. So I'll be dropped here, and I already took the number here ending with 1085. There is a lot of things I want to explain to you out of the camera here, but I'm looking forward. But I don't know what's the best time to call you. But I will leave a text message right now, so when you get out of the show, you will see my number and we can discuss.
I appreciate you. Looking forward to it. Go for it.
So, I'm going to tell you with your realtor, and I'm not trying to say that F you realtor attitude, but I'm going to tell you, if you go new build, your realtor is going to look at the contract and go, there's no escalation clause, which means is, if lumber goes up or concrete goes up or whatever, there can be an escalation clause, means you pay more. So what I would recommend with your realtor is establishing a set rate. And so what I mean is like, okay, we're making 3% on let's say $500,000 house, that's 15 grand. No, I don't agree with that. What you should be doing is going, hey, I will pay you $4,000. I'll pay you 3 grand. That's what I'm requesting. Now, they can say no, and they'll win, okay, because it's the contract agreement. But they want referral business. They want leads. They want Google reviews, etc. And so that's how you push it toward them and go, hey, I'm going to refer you out. I know people. I do this, X, Y, Z. So what you sit there and say is, hey, let's lock this in at 3 grand, 4 grand, whatever. They're still making money at the end of the day. But there's no reason for them to make 15, 20, 50, 60 grand off you. And they can be referral business. And so what you say is, hey, I'll do 4 grand and I'll refer you out. I'll do great Google review, a great Facebook review, whatever. And be true to that. Because there's no reason a realtor should be paying. You should be paying a realtor for a new build to review a contract. I'm not an attorney. And the reason why I say this is because I used to be a contract officer in government contracts. Half my field used to be lawyers. And equivalent in communications and saying, hey, we're like a judge who can say no, X, Y, Z. It's all about saving money at the end of the day. That's all that matters to you. It's like, if you could save 10 grand, it's a freaking win. I mean, that's what I recommend. Go ahead.
Yeah, I'll simplify it. Well,
thank you. Well, apple juice.
We'll work on Robert's pitch, but basically what he's going to do is he's going to save you money on the real estate side, just like I'm saving you money on the mortgage side. And rather than showing him how the watch is made, we're just going to tell him the time and say that we're going to help them save the money on there. And his channel is going to be not family friendly, where it's going to say, F real estate agents, and he's going to be able to show you how you can win on better positioning yourself to save money on the real estate side. Again, for me on the mortgage side, I'm a mortgage broker. I can pull up, I was pricing out a deal here where I price out every day when I start my shows. You see all these different lenders that are shown there. They're all competing for your business, right? So you might have heard, like, when banks compete, you win, right? Well, this is that in action. So I take your one loan application, I apply it to literally hundreds. We have almost 300 lenders that we're working with. We're the largest broker in the country, and we find you the best rate. But that's just a part of it. The other part of it is you need a loan originator that's willing to do it at a fair price. And what that means is not gouge you for their commission. You don't want to be their meal ticket for the month, as I put it. And so that's where I give you, I price it out what I consider fair, but it's discounted to the point where it's aggravating to the other lenders. So if you have a situation where you're refinancing or you're purchasing, you're going to win whether you use me or not. One, you can use me, right? And I can get you to the closing table. Or two, I'll quote it for you and you can take my quote, bring it across the street and hold their feet to the fire, and you save money because they will want to keep you if that even means that they just have to take less of their commission or whatever, and they'll say, oh yeah, we can match it. Okay. Well, either way, you win, and that's my goal at the end of the day. I'm so blessed to be able to talk to so many fine folks here. I'm never on at 10:30 p.m.
Yeah?
Go for it, yeah.
So I'm gonna tell you, realtors want to lock you in to a listing agreement. So there's listing agreements every state. I'm from Missouri. I live in Texas. I've helped my brothers win in Georgia, etc. Before you actually lock in a realtor to represent you, you have two options. You can go, this specific address, which I highly recommend, or you can go city, county, state. The moment they say state, you are screwed, all right? Because they're going to represent you the whole time. Don't do that. Make them compete for you. Because, I'm from Missouri. Rollin, Missouri, Phelps County is totally different than Dixon, Missouri, and Pulaski County. And then if we decide to go into the Clee County of Lebanon, Missouri, Richland, Missouri, totally different. My thing is, make them earn you. They need you more than you need them. That's my advice. So what I'm asking is, and I'm pushing this out there because Kenny's been always upfront, straightforward. Realtors will compete for you, all right? At the end of the day, they're going to compete for you. They want to make money at the end of the day. And I'll be honest, and this is the FU Kennedy that we've been talking about, is that it's usually a housewife that lives at home that wants to compete. There's more realtors on the market than there are houses.
It's true.
You can negotiate that. And my goal is the FU real estate, the 4K listings is, let's be blunt. Let's be honest. Control that crap. Don't make the realtor control it. You control that. Because any realtor that's willing to pull in $1,000, $2,000, $3,000, they'll be happy about it. But if you're going to sit there and give them $18,000 for the same house, you're losing money. Ask for what? What's the question you ask? 2-1 buy down? I know you don't like them.
Yeah.
But go ahead, hit it.
Well, my thing on the 2-1 buy down is that I say, yeah, you are getting a lower rate up front, but for me, I get the phone calls when their rate increases. So I say, unfortunately, I'm going to kick you in the head twice. So the rate's going to go up 1% after the first year, and then it's going to go up another 1% after that. So even though for the 2-1 buy down, they're going to get 2% lower at the beginning, but it's going to go up 1 year and then the second year after that. So for that reason, I'm not a fan of it. I've sold it to people. I present the offers, right? I say these are the loan options that are available, and I let you decide. But where I'm at right now, and we're about 50 minutes in, and I appreciate all the comments. I appreciate the shares, the likes. You guys have been phenomenal. I did not think that we were going to go 50 minutes on a live. And so my apple juice, unfortunately, is empty. And so I am going to end it there. I appreciate you guys.
Oh, no. Same as mine. It's time to call it quits.
I appreciate you guys for helping us introduce Robert here to TikTok Live. You've made it really enjoyable, and I hope you guys are having a fantastic weekend. I'm going to be...
But no, they need to hit you up on Mortgage Talk, man. They need to text you, and
they
want the realistic...
They've been following, they've been liking.
Love it.
That's what I'm saying. I love you guys. I appreciate you. I'll be back on Monday. I'm not sure if it'll be Monday morning, but typically in the afternoon I'll be around, usually around the 4 o'clock hour Central. So if you have anybody who is thinking of buying or refinancing in the next, few months coming up here, please share this with them. And if they're able to follow along, they'll get alerted to this, and it's going to be valuable information for them.
And I'll be honest, I'm not on TikTok yet. I mean, I do have a page, and Kenny's kind of pulled me into this, so I love it and I enjoy it. And this has been fun and experience. And I sit there and joke about being a pawn and lawn chair, but man, I feel like this has been great.
Yeah.
But it's time to do some apple juice, so we gotta let this go. We gotta close it out.
All right, so here it is, guys. My little outro. It's all AI.
It is.
Here's the thing. So I have to use. I was going to use Closing Time with Semisonic. Is my closeout song, but I have to use AI songs because it doesn't get a copyright infringement when I repost the stuff to my YouTube channel, which you can follow me for. If you want to see the repeat of these, I put them up there. It's Mortgage Talk with Kenny on the YouTube. Otherwise, it's Mortgage Talk here in TikTok. Thank you guys. Have a great night.
The market's moving, the rates are live. We're helping you through the 9 to 5. From application to keys in your hand, making home owning the best in the land. That's another rap on Mortgage Talk, helping you with your closing walk. From Texas to your hometown, we're keeping it real, making sure you get the best deal. Hit the follow, don't miss the next show. We got the answers you need to know. Mortgage or cash, whatever your way, we'll see you back here for another day.
Thanks for hanging out on TikTok Live. This has been Mortgage Talk. See you tomorrow.